Welcome to Set and Forget Traders, where precision meets patience. This isn't guesswork, it's strategy, structure, and the smart money's roadmap. If you're tired of chasing trades, strap in. We'll show you how to trade like the banks and not against them. If the market noise has been costing you money and peace of mind, you are in the right place. Hit the subscribe button. This is where structure meets mastery. Welcome to Set and Forget Traders Week 35 again. So we are very privileged to have you here, and you're really intentional to ensure that you're getting the value needed, so as you don't ask what just happened in the market. You might be able to participate in what will happen. So this is the demand chart. Our analysis is in a two-phase base model. We have the demand and then we have the supply chart. So the demand chart is allowing us to know what really the buyers are doing, while the supply chart is really allowing us to see what the sellers are really up to. So we will start with the demand chart, which is the first law in our trading system. And in the demand chart, just to inform you, is that it helps us to know where the buyers are taking their profit and where they're making their entry. If you have been with us on this journey, you'll be able to spot some good opportunities that we have had to see. And from the previous wave, you see the buyers took an entry from the pivot demand zone all the way to the next pivot demand zone. And after they took their profit, you can see on the 1st of August, the price dipped a very big way. The price dipped and the price closed below the demand zone at 99.169 and 90.048 being the decimal line. So the market was below the demand zone, so we weren't expecting much demand zone. We weren't expecting much of the demand. So that's why you can see the last day of the week there was a engulfing bearish candle. Because the price failed to go to the next demand zone, so buyers are still outside the market. So this demand chart is allowing us to know where the buyers are supposed to come in, and right where you see we will be expecting them at the pivot demand zone, which is at price level 97.143. We'll be expecting buyers at that level, and it has helped us avoid losses. Somebody might have bought high, and this is a very big, over 1,100 points drop in the price. So with this demand zone, this is the kind of setup we'll be looking to trade. The first wave will be us pushing price back to the next demand zone. Just a highlighter for convenience. The first wave will be us pushing price from the first demand zone, from the pivot demand zone 97.143 to the demand zone at 99.058. Then if price manages to push inside the demand zone, we will again push them into the next pivot demand level at 100.274, and then later we'll push the price into the main demand zone at 100.2431. Alright, but being where the price currently is, we are going to expect the market is going to find support at the demand zone, the pivot demand zone. And another question, we have talked about the entry on the demand zone. The supply chart allows us to see if the sellers really took profit off their previous sell, because there are two entry models. We can either enter the market. Let's go to the supply chart. We can either enter the market after the sellers have taken their profits, because after sellers take their profit, they're going to be a reduced volume of the sellers. So that gives the buyers an edge to make their first demand order. So briefly, you can see the previous supply chart. This is the daily time frame. All right, you can see the sellers tried to take profit inside the supply zone, which is at decimal line 98.026 and proximal line 98.248. So you can even notice the last day on Thursday, the market went up. Yeah, it closed because it opened exactly at the supply chart, at the proximal, at the decimal line of the supply chart, and it closed high because the sellers had exited. And we might later see that it gave us a false evidence maybe, or did the news, the speech from Powell, affect the technicals? Yeah, because when you check out the technicals even before the news, we can be able to spot that the sellers had already taken their profits from the previous day candle. We are able to spot that the sellers had taken their profits and they had left. So in essence, this candle on Friday might not be to support sellers, but might be to just a reaction from the fundamentals. If you're keen on the markets, you'll be able to understand there was a speech made on Friday. And again, too, we had some speech from the president of USA, Donald Trump. So our analysis suggests that if we were to wait for sellers to take profit, they're going to take the profits at 97.311, which is the pivot supply zone. But if they had taken their partials, we are going to wait for the pullback of price into the supply zone and see the reaction of sellers. Will the sellers push price lower, or will the sellers allow price to go above the supply zone because they had already taken their profits from the previous bearish wave? All right, so we are not going to buy until we see sellers have taken their profit at 97.311 and we see price close above the supply zone. All right, because it will allow us to have a good leverage of how many points? 1,506 points. That's where the next pivot supply zone is. So we're going to take advantage of the liquidity grab and buy up to the next pivot supply zone. I hope that's clear, and I hope that really resonates with your analysis, so that you might be able to compare our analysis with analysis and make money off the table. So the next analysis you're going to check is this is the GAN analysis, and we're able to see that the price is on a support. The monthly candle really came down, but we expect a rejection for the price to go back up. Yeah, you can see on the monthly, the price is really at a support. So this coming week we expect a bull run. Yeah, that's what we're expecting. On the weekly time frame, the price closed just below the support. Yeah, the price closed just below the support. So the coming week we expect a bullish candle. Yeah, the next analysis we're checking is the same, no signal on the channels, but the price looking bearish. On the weekly, on the daily too. Yeah, price looking bearish. The next analysis, yeah, the daily candle. Yeah, able to spot on the daily candle was rejected. Yeah, a confluence of all this analysis allows you to present the best sentiment and anticipation of the market. As you can see on the daily candle, there was a very big bearish in pattern. The resistance didn't allow the daily candle to close above it. Yep, that's what you're seeing, guys. Yeah, the daily candle gave us a signal. Yeah, on the moving average, which is a trend average, checking on the monthly time frame, we're able to see the price has come back to the support. So next month we expect price to go up and try to test 100.7. Yeah, we're expecting a bullish wave, because if price goes below this, we're going to close the trade. On the weekly time frame, again, there were many buyers in the market, and now they had to be liquidated, for them to be allowed to push back higher, to push price back higher. On the daily candle, you saw on Monday, Tuesday, Wednesday, Thursday, Friday, the market had tapped the resistance. All right, the market had already tapped the resistance at 98.803, and now the market was poised for a bearish play on the daily candle, which happened. On the weekly time frame, nothing. We see the news validated the trend. We expect to see a repair. Now, next to the institutional moving average on the monthly time frame, we don't see nothing much, but the price trying to close around the support, because the previous month we had a good clean buy because price had hit the support. So this time we expect price to move up and go into the next support, and the rest resistance at 100.761. On the weekly time frame, we just look at the bearish trend, nothing else except the market really aligning to the sellers. On the daily time frame, nothing else but an invalidation, because the price was really poised to be above this support, which was a good struggle. But on Friday there was invalidation due to the news. That's it. On the 4 hours, we saw the market really decided to close below the resistance at around 198.736. Lastly, on our trading analysis, we're going to check on this simple moving average, which gives us a very clean analysis. And thank you for staying up to this moment, because it allows us to see a very good clean price action. So this month the candle was rejected by the resistance around 100.155, and then the price is going lower. Now it has found a support. So because this is the last week of the month of August, we expect buyers to push price higher so that the candle should not close below the support. All right, and if it goes higher, then the coming month we expect a retracement up. That's it. On the weekly time frame, we're seeing the bears having a good field of play. On the daily candle, nothing clueless but the distraction from the news. On the 4 hour time frame, bears had a very good leap of faith, 98.747. So our analysis stays on the higher time frame to expect the monthly candle to close just closely above the support, and the coming new month of September, the price to go higher than it did. That's it. So the next analysis is the fundamental side of the market, and that's where we are going next. So thank you for staying up to this moment, and let's continue into the next phase. Welcome to the fundamentals of this week. Monday being on the 25th of August, we're seeing Chicago Fed National Activity Index, new home sales for July, same, nothing much on Monday expected. On Tuesday, we're seeing news of the durable goods orders. There was a speech from the Fed member backing. Then S&P, Chester-Hiller, home prices, consumer confidence. Nothing much on Tuesday. And same likewise to Wednesday. The main interest will be the speech from backing again. And then on Thursday, we have the jobless claims data being released. That's on Thursday. There's going to be a very volatile news, maybe, because again we have the GDP growth rate to be released on Thursday. Yeah, take keen caution on that. And then on Friday, we have speech from Whaler, and then we have the PCE price index, we have the trade balance being released. Yeah, on Friday we have quite a run on fundamentals. Yeah, we have the PCE price index. Yeah, I think on Friday and on Thursday are going to be the movers and shakers on the USD. We expect some demand to be stirred on Thursday and on Friday. Yeah, nothing else except that. So technical analysis seems to be the order from Monday till Thursday, then fundamental seems to kick in and shake the analysis on Thursday and on Friday. Yeah, if you have any sentiment you think we did miss, please share it in our comment, and we'll be glad to review it and share it with our community. So for that, thank you for joining us, and have yourself a blessed, lovely, peaceful week. Manage your risk well, manage your portfolio well. There are more than 17 weeks to go, so plenty of opportunities to take advantage of, but manage your portfolio well. Have a good week. Set and forget.